again, this is our team here, Small Business Development Center. Please feel free to reach out to us at the phone number down here below or at the email address here. We have a number of advisors throughout. Eric Deliri is our fearless director. And again, please feel free to reach out. I'll have the slide again at the very end for any questions that you may have. As always, everybody, please remember that if you have any questions, please put them in the chat. This is very, very important. Put them in the chat so we can keep a running tally. We have more people coming in here. That's great. Great. Let's talk about just very quickly some video conferencing norms and communication during the session. Very quickly, it's always good etiquette to mute yourself. You all are doing that. That's great. If you're using a phone, please make sure to use that mute button. Also, you can always unmute yourself and talk. If you have any pressing questions, absolutely. If I made some sort of mistake, whoops, you know, like slip of the tongue or whatever, oh my goodness, you could always let me know. It happens, it's all right. Or you could also use those reaction buttons down below, right? The thumbs up, the clap, or what have you. Oops. And there you go. So let's talk about, what we're going to do today. We're going to talk about what a business plan is, and most importantly, why you should have one. We're going to look at the different parts of a business plan. We're going to tackle business plan examples, and then we're going to finish off by talking about life plan, which is always good, always very positive life plan. And so I'll walk you through it, essentially. I'll walk you through life plan. So let's keep going. So what in the world is a business plan? Well, it's an important document whereby, and this is important here, the definition, business opportunity or a current business is identified, right? Described, analyzed, and examined for its feasibility. It changes your opportunity, your business idea, into a business project. It allows you to really, really analyze and determine the economic, financial, and technical feasibility. A lot of business plans are well done, and some business plans really also allow you to determine and identify the fact that this business may not work, right? And that's what you want. You want it to be able to help you in that way. So let's keep going. Now, why should we have a business plan? Again, it's a global analysis of the business. It takes a look at every single facet, from marketing to technical feasibility to financial feasibility and so on. But it also allows you to manage the business properly. And this is very important. Laying out clearly the financials, your expectations, and the marketing as a whole. In a sense, I'd like to describe it like a business card, right? It introduces your business to others, okay, such as banks, investors, institutions, or even public bodies. It is very important to have, really kind of like your business card. You can explain what your business is to somebody, but by really handing that out, they'll get a greater understanding. Now, it's done usually when it's time to seek cooperation or seek some sort of financial support from someone, from any different kind of bank or investor or anything like that. They'll want to know. It's more than just your excitement about the business. It's the numbers. It's the hardcore. It's really the meat of the business here. Now, business plans are both planning and management tools. So let's talk about that. How are they planning tools? Well, we have more people coming in here. How are they management tools? Well, they'll take a look, again, I mentioned this, at the economic and financial projection, but it'll also be an analysis of supply and demand and different management indicators. Okay, it'll also take a look at the commercial strategies, and it'll help with HR and your risk management. That's how they're a management tool. but at the same time, they're also a planning tool. It really looks at a number of things, including qualitative, quantitative information, and it specifically looks at results-focused actions. What am I supposed to do in order to obtain those results? So let's explore the different parts of a business plan. All right, let's explore the different parts of a business plan. We'll see them again when we look at live plan. Oops, when we look at live plan. So first thing, who are we? That's part one, right? So what is our present situation? So big questions like, what's the industry like? Okay. What is its present situation and future outlook? Let's say, for example, you want to start an art gallery. What is the art gallery industry like? The art supply industry like, right? What is its future outlook, right? But also, who are the competitors in the market? And a lot of people forget this. What is the degree of rivalry among the competitors and any other prospective competitors as well? Okay, so are there other art galleries on the market? Maybe there are. If perhaps they are geographically distant from one another, perhaps the degree of rivalry is not that big. Perhaps it's different types of art galleries, so the degree of rivalry will not be that important as well. All right, how is the business that I'm proposing or our current business different from the competitors? Perhaps I'm doing a modern art gallery and the others are doing sculpture galleries or something like that. Then comes the famous SWOT analysis: strengths, weakness, opportunities, and threats, right? Be open and honest with yourself. What are our strengths? What are our weaknesses, right? Perhaps cost is a weakness. What are opportunities that you see within the market? And what are prospective threats in the market as well? Have you heard that another gallery may be opening? I don't know. Also, again, present situation, is there a specific target market for this business? That's a question to look at. Next, what do we want to do? What do we want to do? Now, why are we investing in this business? Why? Why am I doing this? What does my business consist of? And the goods and the services that I'm going to offer on the market, right? Also, what strategy am I going to be using? I mean, this is very important. How am I going to maintain that specific competitive advantage that I've got over time? Okay. Am I going to specialize? Is there going to be differentiation? Or am I going to compete in cost? Those are questions that are very important from an economic point of view to ask yourself. Very key, very important. So for example, if you want to open a general art gallery, for example, right? A general art gallery, that is great. That you might find yourself in competition with somebody else opening a general art gallery, generalized art gallery. You might shift over to modern art or sculptures or pottery. That would be your specialization, right? Am I going to compete in cost? Perhaps you're looking to open a ceramics art gallery, but somebody else is in the market as well. How are you going to compete in cost? Are you able to lower your prices enough so that individuals will come to you? Those are all questions to take a look at. So that's the competitive advantage question, all right? So far, so good, everybody? Can everybody give me a thumbs up? Push that button. Thumbs up if you're all still with me. And so far, so good. I want to make sure I don't lose anybody. Yes, my friends, I see all these little yellow thumbs. That's what we're talking about. Very good. Let's keep going. Let's keep going because this is great. This is great. All right. All right. Let's move on to the next question that we got. How do we want to do this? How do we want to do this? So what's our strategy like? All right. A lot of people forget this part. Right? So jazzed about starting a business, forgot about the strategy, right? What is the mission of my company? What is the mission of my company, right? From strategy, you get long-term objectives. Then you get the action plan. Have resources been allocated to such plans, right? How is my marketing policy structured? How am I going to do this, all right? Have I considered the price, the location? Have I considered the different types of products that I'm going to actually be selling, or services that I'm going to be providing, right? How about promotional aspect? Again, how many, let's talk about HR here. How many employees will comprise my staff? Now, if I have more than myself, what are my personnel management policies and strategies? Have I worked on an employee manual and so on and so forth? These are all questions, the very important questions if I have employees. Have I planned for the financial needs that could arise in the long term, right? We're hearing about inflation. We're hearing about possible recession. How does that fit in? How does that work, right? Have I asked myself all of these questions? Let's move on. Oops, here we go. Next, very important one here, everybody. How am I going to finance this project, this financial analysis, right? The purpose of this section is to analyze the profitability and economic feasibility of the business project, okay? Right? This is, so to speak, the quantification section, right? The economic impact of decision making, right? I'm quantifying everything here. So I'm going to look at a full analysis here. We're going to look at projections over the specific time horizon that I'm building my business plan over. Is it a 2-year, 5-year, 6-year business plan? Okay. We're going to look at income and expenses, expenditures. We're going to take a look at an investment budget and a depreciation schedule, profit and loss account, borrowing requirements, balance sheet, cash flow, and so on. Now, don't be scared with all these accounting terms here, okay? Live Plan allows you to plug in the numbers and it'll automatically generate all these documents for you, right? But it's important to know what these are, all right? Let's take a look. This is an example of my income and expenditure projection. I'm going to pull out the old pen here. Yes, the old pen. I got to move some stuff out of the way here. So here's an example here of my unit price per product line. Suppose I have 3 products here. Product 1, product 2, product 3, right? This is my unit price. I'm going to go ahead and set year 0, year 1, year 2 at 35 per. So again, my art gallery, this might be my ceramic dishes or something like that, okay? Boom, right there. Product 1, 35, product 2, and so on. Now, unit quantity per product line. This is how much I expect to sell. All right, this is how much I expect to sell. Now, is it, uh-oh. Come on, Prevo, you just made a little clicked on the wrong button. I apologize, everybody. Give me a second, just 1 second here. Oops. This happens all the time whenever I do this. Technical difficulties. It happens. It happens. It's all right. Let me get back to it. Oops. Oops. Again, I apologize. What am I doing? What am I doing? All right, just give me about 10 seconds while I fix this. Thank you. There we go. And we're back. So what is the unit quantity? Well, it's the amount that I expect to sell. Now, again, it's different. It'll be different for every product. But let's say that Q1, right, quantity 1, I expect to sell this many, 3,650 of whatever product 1 was. And then here, product 2, right, Multiplying these two, I get my operating income. Pretty straightforward. I add them all up and I get this amount. This is my expected projection for total sales. Year 1, year 2, year 3. You can always adjust this every year. You might have underestimated which ones you were going to sell. Maybe some art pieces that in your gallery are selling like hotcakes, and maybe some are not selling at all. So it's totally up to you to take a look and see. Next, what are my expenses? Well, here I just put for people, I'm going to have 3 people. My mean salary is going to be about 24,000. Let's say, I don't know. I just picked the number right there. And then this will give you the number overall in question. Now, there's a lot more that you would have to take a look at. I mean, if you have an art gallery, you would have rent, you would have utilities, you would have all that stuff. But again, this is just to illustrate income and projection and expense projections and so on. Now, let's take a look at depreciation. What's depreciation and why is that important? Well, depreciation schedule is the loss in value that investment in fixed assets undergo over time. For example, equipment, machinery, and so on. Suppose you have a, like I said, an art production facility or whatever, and you invest in a kiln, one of those big pottery ovens right there. They cost a lot of money. You're going to need to understand that that is going to depreciate over time. If you expect, for example, to keep that kiln for 10 years, then you can, here we go. If you expect that kiln, for example, to depreciate over time, well, what's going to happen is the value of that kiln is going to go down by 10% because it's over 10 years, right? Little by little every year. It all depends on what you are buying. It all depends on what you are depreciating. So that's important to take a look at as well. Okay. So, so again, depreciation, that, let me ask, does anybody have any questions about that, about depreciation? So some things, some big things that you can buy include big vehicles, machinery, you know, if it's a restaurant, an oven, or something like that. You're going to need to set up a depreciation fund. Why? Well, because you don't want to find yourself, right, after 7 years in need of spending a large amount of money, right, all of a sudden to replace that big expense. So suppose after 7 years, that van, that delivery van that you had, needs to be replaced. Eventually, you're going to need to have that money from that fund that you've set up in order to use it to buy another one, right? So the kiln after 10 years, you're going to need to replace it, right? And so on. All right, let's move on. Okay. Oops. I just did the same problem as before. Again, I apologize. All right. So the example, sorry about that. Oops. All right. So what do we have here as an example? All right. I want you to take a look at, I'm going to draw here just a second. Here we go. Again, those funds will obviously come out of the profits, right? You're going to need to eventually replace that big machinery, that big investment that you've made, investment in equipment. Okay. So for example, let's do a straight line depreciation method. What does that mean? Well, let's say that you buy a $63,000 piece of machinery. Over 10 years, it's going to depreciate by 6,300. And so you can write that down. Essentially, it's pretty straightforward. You could write that down just like that. All right, let's move on after depreciation. Now let's take a look at profit and loss account projection. All right. So take a look at this. You're going to have your sales. Oops. Right over here, different product lines and so on. You're also going to have your variable costs. What's a variable cost? It's a cost that is going to be used to produce the different products in question. So for example, in our art gallery, let's say it is pottery, you're going to need to have the purchase of clay. Clay is going to be needed, right? The more clay you have, the more you're able to produce in pottery, the more you'll be able to sell the pottery. If you are selling less, fewer bits of pottery, you're going to need less and less clay. That is what it is. So direct manpower, people power right over here. Okay, that is also a variable cost. Why is it direct? Well, because suppose suddenly your the sales all explode and it's amazing and you are in need of producing way more, you're going to need to hire more. That is going to be directly related to what you're selling, and so that is considered a variable cost. Also, watch this. You're going to need to take a look at fixed expenses as well. Those are completely independent with what you actually produce. Think about it. If you have a building that you're going to need to rent, whether or not you're doing a little bit of business, medium, or a lot of business, you're going to still need to rent that building. All right. And there's more: communications, transport, that sort of thing, office supplies, repairs and upkeeps, utilities is a big one. All right. Depreciation. Well, yeah, I mean, you have one kiln, right? You're going to still need, it's going to be a fixed expense. That can move over to the variable expense if you're doing so much of it that you need to buy 2, 3, 4, 5 kilns and then sell those kilns accordingly. But we're going to leave it at fixed expense here. That sort of thing. So pretty straightforward. Again, remember, these are all projections that you're doing. Afterwards, you arrive at your earnings before interest and taxes, and then you get your profit right over here. Again, profit and loss account, Life Plan will be able to generate that for you, no problem. Next, let's take a look at borrowing requirements, right? The amount borrowed depends on the investment, okay, in fixed and current assets as required each year. There's a lot of ways that you can do this. There are a lot of ways. One way that you can do this, and we're going to take a look at this website right over here. I'm going to put this in the chat as well. I'm going to put this in the chat as well so that you can look at this too along with me. We're going to take a look at, oops. Give me 1 second, and 3, 2, 1. The SBA's website, and this is in the chat. If you want to follow along with me, you can. You don't have to. It's all here. And so this is Fund Your Business from our friends at the U.S. Small Business Administration. There's a lot of different ways that you can go about it, but these are the 3 main ways. Are you ready? Self-funding. That's right. You save up and you self-fund. Investors, absolutely, or business loans. All right. I always say it's important to be as conservative as you can with regards to this. But again, when it comes to funding your business, this is where it goes. You're going to have this information, right? So please feel free to read this if you would like. Okay. And, how to get venture capital funding. Remember, we talked about this. Share your business plan. Whenever you interact with somebody looking for financing, that business plan is going to be key. It's going to be absolutely key. So, isn't that cool? All right. Next, let's move on. So again, you're going to mention the borrowing requirements in your business plan, how you're going to where you're going to borrow the money, and so on. All right, let's talk about cash flow. Cash flow, it's all about the amount of money flowing through your company. The 3 general categories of cash flow include operating cash flow, the amount of money that's coming in and out for operating expenses, operating income coming in, coming out. all right? The investing cash flow, and of course, and this is important, financing cash flow as well. So operating cash flow, what are we talking about? We're talking about everything regarding operations. So everything from your depreciation to your net income, increase in accounts, and so on, okay? You're noticing that we also have the investing cash flow. Do you need to purchase more things? Is there another equipment purchase that you need to do? In this case, somebody purchased a $400 piece of equipment. Okay. Next is your financing cash flow. Are you paying off debt? All right, payments on the debt. Is there any owner equity distribution that you need to go ahead and make, right? And so on. And then at the end here, we have a 2,200 ending cash flow statements, probably for 1 month, but this is just a sample. It's pretty straightforward. It's pretty straightforward. Again, I want to remind you that Life Plan generates this for you, which is kind of neat, which is pretty cool. All right. And let's move on to the next part. Next, is there demand for my business? This, my friends, is the market research and competitive analysis. Now, we're talking about a twofold situation here, two things. Number one, asking yourself this question. Are you ready? Are you ready? Are you ready? Yes, you are. You want to determine if there's a need for my product and services. And you want to see if you can meet that need in the current market. You're going to need to ask yourself a couple of questions, a few questions. Number one, is there a desire for my product or service? All right. I have an art gallery that I want to start, pottery. That's great. But I've determined with my market research that there is no need. There is no demand for this. Okay. So that's one thing to take a look at. All right. The other one is how many people would be interested in my offering? Is there a strong enough market size? Right. Okay. Next, what is the income range and employment rate? These are economic indicators. These are broad, generally tend to be at the macro level here, but this is important. If you find yourself interested in opening an art gallery in a more economically depressed area, that is depressed because of macro changes due to the closing of a factory or something like that, is it all that likely that people will spend their limited disposable income on your pottery, right? If you want to open up an art gallery or pottery store or something like that. Next, location. Where do your customers live and where can your business reach? Now, is this do you have a presence online? Are you able to deliver? Can they come to you? Are you centrally located? Those are all very important questions in the market research analysis that you need to do, desperately need to do. Also, are there similar options already available to your customers? Are you going to open up your art gallery in between 3 other art galleries? Maybe that'll work, maybe not. So that's something that you need to take a look at. And that's not all. What do potential customers pay for alternatives? What do they pay for alternatives? Let's say, you've arrived at a pricing point. You realize that in order to break even, you're going to need to sell your pottery for $50 a piece, but you realize that over there, this other store is selling it for $30. Is that going to work? Right. So these are all fundamental market research questions that you're going to need to ask yourself. Incredibly important. Very, very important. All right. Let's move on. Beep. The best way that you can get market information, begin that market research, is by talking with an SBDC advisor and getting a referral to the Market Research Institute from Oregon's SBDC, the Market Research Institute. So what is that? Well, let's take a look. I'm going to go ahead and put this link in the chat again. You can go ahead and take a look at it as well. And so the Market Research Institute allows you Market Research Institute. Ooh, I want to make sure that I'm sharing this right. Market Research Institute, right there. Here's this website. Allows you to get customized database reports to make informed market building decisions. This is thanks to the SBD. These guys, they're wonderful, wonderful, and they are incredibly useful, incredibly useful. So again, talk with your SBDC advisor and ask about the Market Research Institute. But there's more. This isn't the only way, but I would say this is the #1 way. They have reports that are really focused down to the individual town, the individual city, the individual neighborhood. You could really take a look at a lot of things, really, really specific. And this is information that you cannot fail to include. You must include this really, really in your business plan as you develop that market analysis. But this isn't the only way. There's a lot of things that you can do, a lot of tools that you can use in order to really gain a better knowledge, better understanding of the market. So let's take a look at a couple more. Whoops, here we go, right there. You know what? Maybe the best way for me to do is just this. There's a couple more. I did forget this one thing. I apologize. I want to make sure that you understand something, that the value of a trend is far more important than a single data point. What do I mean by that? As you take a look at these different tools that we're going to take a look at. So #1, we have that Market Research Institute. That's the big one. #2, and all the way down to #10. I'm going to show you the rest. But remember, you're looking for these market trends, and that trend is far more valuable to you than any single data point. Okay, incredibly important. Now, let's go. Let's do this. This is going to be great. I'm going to go ahead and shift over back to this view right here, because I'm going to copy and paste a lot of these in the chat. So this will help out a little bit. First one I would like to take a look at is answerthepublic.com. What is answerthepublic.com? Answerthepublic.com is a website that allows you to discover what people are asking about. So let's take a look at this. Let's take a look at pottery. Oops, right there. It's going to look at some of the questions that people pose online. Pottery. Oh, look at this. Oops. All right, let me close this. So let's take a look at this. We have pottery right over here, okay, where here's some of the questions that people are asking about pottery. Information about this. Can pottery go in the oven? And so on. Can pottery be recycled? And so on and so forth. How is this useful, you ask? Well, perhaps you have a blog on your website, where you are interested in attracting traffic. You know that these are some of the questions that people have asked. You're making pottery for your art gallery, okay? These might be important blog topics that you can use to attract traffic. One data point, why not? Let's keep going. Let's look at the others. Next, this is Google Trends. Some of you might be familiar with Google Trends. Google Trends, oops, and you know what? I just forgot something. I just forgot to put Answer the Public in the chat. Let me put Answer the Public in the chat. I apologize for that. Whoops. Let's try that one again. We have Google Trends, but here we go. Here's Google Trends right there. Just want to make sure everybody got it. Okay. Next, What is Google Trends? Well, let's search for a topic. Let's search for art gallery. Right there, type of museum it says. Okay, I'm going to go ahead and change it from the United States over to Oregon. So I'm going to say US Oregon. In the last, let's say, 5 years, remember we're looking at trends. Those are the important ones here. Very, very key. And next, I'm going to compare that with another pottery. Right there, again, Oregon, over the last 5 years. Very good. All right. So what am I seeing? Well, I'm seeing trends over the last 5 years go up and down and up and down and up and down. It peaks around the holidays every year. It's interesting. So that might be something that you could take a look at. Perhaps more social media references to pottery during Christmas time, right? That sort of thing. But that's not all. Look at this. It takes a look at the topics that are discussed in the different regions of Oregon, right? Oh, pottery is the dominant one here. If I remove pottery, if I remove the term, then I can see just art gallery right over here, how popular this is in search terms and so on. Not only that, I can also see related topics right over here. Porcelain is another one right here, and so on and so forth. Different museums of art and blah, 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 visual genre, decorative arts, and so on. Again, why am I doing this? Well, because I'm building a rich tapestry, so to speak, of the market in question, what people are asking for. These are just tools. Trends first, please, trends first before anything else, all right? Let's take a look at something else, another one. This is statista.com. Again, these are also more tools that you can use, again, with regards to your market research. Keep going, keep going. Let's go to Statista. What is that? What is that looking like? Whoops. Sorry, I'll just type it in. All right, so I'm going to find, again, studies. You can find forecasts, pottery and ceramics. I don't know. Let's type that in, do a Statista search. Right there, here you have industry forecasts, statistics, information about ceramics industry worldwide. Again, I'm just giving that as an example. It's all here, okay? And it's pretty interesting. You can dive deep and see a lot of information here. This is something that you can mention in your business plan. Again, whenever you're talking about the macro element, something like that, it's all here. Let me put in Statista over here in the chat for you. There it is. There's more, even more. Yes, sirree, absolutely. More than that, typeform.com. Some of you might have used typeform.com, SurveyMonkey. This allows you to make essentially a survey. This is much more of a micro market research tool than a macro element that we've been taking a look at before. But let's take a look a little bit more at Typeform. Any types of surveys. Suppose you have a mailing list, for example. You want to go ahead and you want to go ahead. Let's do it this way. You want to go ahead and send out a survey to your mailing list or something like that. It's all there for you. You can make really interesting, beautiful looking surveys, gather that information. That can be some raw marketing data for you. And so that's pretty neat. I'm going to put that here. You have other forms, other form building programs, which include things like Google Forms or SurveyMonkey. I've used both of them myself. It's pretty neat, pretty cool. All right, let's move on to the next one. All right, here we go. Next one is dimensions.ai, very similar. This will take a look at a lot of different academic papers on your different topics. Again, you use it, you don't use it, it's totally up to you. Some people really, really like it. Let's try that one again. Provo, sorry. Some people really like it. Some people don't need to use it at all. It is totally up to you. If this doesn't work, I'll just move on to the next one. Give me 1 second. I'm having some technical issues here with my copying. Whoops. That's fine. Let me move on to the next one. Other alternatives include Google Scholar that you can use. Google Scholar. It does the very similar thing. All right. So, for example, ceramics. Right, introduction to ceramics, information about that. These are all academic articles that you can use. I'm going to put this one instead. I'm having some issues with my copying and pasting from my slide presentation program. My goodness. It's okay. It's all right. It's going to work out. Let's move on, everybody, to, let's move on, everybody, to the next one that I have. And this is less of a, academic tool. This is very familiar, and you're very familiar with this, and it's Yelp. That's right, Yelp. Also, Google, very important, Google reviews. Why is that important? Well, think about it. You're trying to identify a gap, right? Suppose you want to take a look and fill in a gap that other art galleries are not providing. So what are you going to do? Let's take a look at the reviews. Notice that my competitors, they don't have good lighting, they don't have good product, and they don't have good products and so on. They don't have all sorts of different things. What is it that you are going to offer? Perhaps you'll offer that lighting that they don't have. Perhaps they don't have the good deals. So Yelp and Google reviews, and I'm going to put them in the chat. I see a question here. Yelp.com and Google reviews. Can we talk about operating agreements? Well, the best person to talk about operating agreements with would be your SBDC advisor. When it comes to that, operating agreements are different. There's a lot of variations, but I would pass this question on to your SBDC advisor for right now. Let's finish off with the last one that I've got when it comes to market research. And this is this one, city data. It's a little bit not as much of a market research tool in so much as it is a demographic research tool. So citydata.com is pretty neat. I'm going to type in a city, let's say Hermiston, for example, in the area. All right, let's type in Hermiston, Oregon. This will give you all the data that you are looking for, from the population, right, to the median household value, to people living in poverty, to all sorts of information with regards to demographics, crime, you name it, the crime index, employment, a history of the town, nearest cities, and so forth. So for example, if I'm setting up a ceramics art gallery, I don't know, in Hermiston, I can say that the nearest town with 50,000 people is 26 miles away in Kennewick. And that is far enough from the competition that I can feel good about locating my business in the specific area. This is chock full of numbers, statistics, and you are not going to be disappointed. Some of these are a little older statistics, but it's pretty interesting. I don't know, for example, if you're setting up a a ski equipment rental service. You can take a look at the snowfall, the average snowfall, right? The average days of sunshine and so on and so forth right here. So it's kind of neat. All the hospitals, schooling, educational attainment, libraries, you name it, it is all there. I would highly recommend citydata.com. Highly recommend citydata.com. I've used it so often for my research over the years. Right over here. Next, let's move on. I want to make sure that we are on time. Next. The last one I'm going to give you is less of a marketing tool and more of an interesting site for you to take a look at. This is Google Alerts. Now, I don't know if you're familiar with Google Alerts, but they will go ahead and send you an email if, for some reason, something online is published that has that specific term that you are looking for. So let's go to google.com/alerts. All right. Here I have my name. And so, for example, I'm going to put ceramic studio in Hermiston, Oregon. I'm going to do that. And what that does is that searches the web. Oh, hey, look at this. Pendleton Center for the Arts, ceramics, pottery, clay, and so on. You can create an alert that will send you once a day, as it happens, once a week, this thing, and it's the latest news that is occurring at any given time about these topics. So this is less of market research and more of a get the latest and the greatest news about this. This might help you. I don't know. All right. So we're done with all those tools. But again, I want to remind you, talking with your SBDC advisor, that is the best way, particularly the Market Research Institute. And number two, remember, we're looking for trends, data. Trends, data points are good. They're not as valuable as data trends. So I don't want you to go ahead and go, aha, Google Alerts said that one thing. That must mean that I must go. No, no, no. It's the collection of everything pointing towards towards something. That is going to be key, far more than just an individual data point. All right, let's move on to a couple more here. I have 3 more that I have over here for you. If you want, you don't need them. I'm going to put them over here. I'm going to put them over here. So I forgot Google Alerts, to google.com/alerts. I apologize. This one is the market research and competitive analysis. All of this is in the chat, everybody, again, from the Small Business Administration. I also have asa.net. asa.net. It's all right. I'm having trouble clicking. It's okay. Next, let's move on with the rest of our presentation. I have about 10 minutes before I move on to live plan, or a little bit more than 10 minutes. Let's take a look together, everybody, at a number of different business plan examples. So we're moving on. We're done with the different sections here. Hope everybody's still with me. Okay. Let's take a look at a couple of business plan examples. All right. This is from our friends at bplan.com. It's a website that is owned by LifePlan. And let's do this together. All right. Let's do this together. What do we have here? We have bplans.com, 500 free business plan examples that you can take a look at. All right. So I'm going to go up here to sample plans, All right, we're going to take a look at this exact website in just a second. Sample plans right here. And you have them in different categories. It's always a good idea to take a look at them, see how one is done in your industry. I'm going to click on Fine Arts and Crafts Business because I'm looking at my art gallery one. Here we go. Here we go. Stained glass gallery. We have more. We have art supply store and gallery business plan. Why not? And there we go. They called it the No Artist Left Behind Creative Center. Interesting. Art supply store and gallery business. Nice. Now, hopefully this will work. Yes, it'll work. All right. And again, these are just examples. All right. Just examples. Here we go. We start with the executive summary. That's right. The executive summary is the big summary that you're going to need. All right. At the very beginning. All right. It has information about the market, the organization, product, service delivery, a quick summary about the financials, and so on. It has information about the objectives. Whoops. It has information about all of that. I want to make a recommendation, everybody, that your executive summary, please write it at the end of your business plan. This is important. You're going to make your whole business plan. That executive summary right there is exactly what it sounds like. It's a summary. You're not going to know what to put in there until the very end. I've seen business plans where people write that at the very beginning, like a micro business plan, and then realize, as they're writing and writing and writing, they need to change it so much they might as well have written it at the end. Write the executive summary at the end. Okay, very important. A lot of people who go through business plans will simply read the executive summary. And if they want some more information, they'll go deeper, right? And so that's the first thing. Sometimes, sadly, the only thing that people read. So make it engaging, but also make it simple enough for it to be understood. Let's take a look at what I mean here. So look at this first paragraph right over here. This first paragraph right over here is a wonderful summary, right? Stands for No Artist Left Behind. Live your art. NCC is a specialty store offering a large array of artist materials, supplies, crafts needs, a gallery and educational center. NCC will provide a pleasant facility that will inspire and support amateurs, professionals, and crafters. This is in Hawaii, in the Big Island arts community, and so on and so forth. This is an engaging first paragraph of your executive summary. Then you have the section about the market. This is sort of your executive summary about the market section, right? Very simple about that whole market that you've been able to analyze and so on. Take a look at it, read it. Not this specific one, but anyone that relates to your industry here on bplans.com. Let me go ahead and put bplans.com in the chat, my friends. And so that you can see all of this. All right. This is information about the organization, about the products and delivery, information about financials. NCC will show modest profit for month 1. Very simply put, that's what you need in an executive summary, and so on and so forth. Next, it has information about the company. Oops. About services, about the company, right? Company ownership, how will it be owned? Who's going to own it? What is the structure? The startup summary, where the money will be coming from, your cash on hand and whatnot, and so on. Information about, then comes the services. Take a look at it right here. What you're going to be able to offer. Since they're offering, what are they offering? They're offering products here. So they have the actual brand names. Don't be afraid to include those. Okay. Then comes the market analysis summary. Right over here. Again, I'm walking you through this really slowly just to show you the different sections. It's all there. It's all there. All right. Here's the strategy and implementation summary. So how are you going to actually implement these strategies, right? Strategic assumption. Every resident on the Big Island is a potential customer, right? Our proximity to Costco and Home Depot will bring in those traveling, and so on and so forth. Information about competitive edge. What are the elements of competitive advantage? Customer service, location, an arts education center, and a gathering place. This makes it very easy to read. Next, a web plan summary. How do you go ahead and integrate not only technology, but also the internet, website, social media, the whole thing? That's a section in and of itself, right there. Will people be able to purchase things, communicate with you online or not? Is it just a source for information? You opening a restaurant? Well, is it only the menu that you have on the restaurant? And so on and so forth. Question: how often, if at all, should you update your finance section of a business plan? Let's say you are a year into a 3-year business plan. Well, you can go ahead and update it every year. You can do that. That is something that that's possible. Remember, business plans, like any other plans, the moment you print it, it's often been said, the moment you print it out on paper, it's often been said that it's obsolete, right? Anything you print out, things are changing, always changing. Keep it updated. You can keep your business plan, and you're going to need to print it, obviously, but you can keep your business plan also as a living document, right? It is the current business plan. If you are doing a business plan over 3 years, you can update it every 3 years, every year, right? That'll work out. Again, I don't want you to think that it's a static concept or document, right? Because yes, there is that element where you print it out, you're able to show it. Very first question people will have is, how recent is this, right? Oh, this is the latest one with the latest information, okay? When you're talking about a cost accounting, sort of budgets, that's a different story, right? You can indicate the budget and put that in the financials, and then come in and have the brand new budget right after that is updated. So you don't have to change the whole thing. It could be just the financials itself. You can also not change things, but add things, right? Keep on adding. This is the latest profit and loss statement. This is the latest balance sheet, and so on. And so you can have that as sort of a report. It may not be part of the business plan, so to speak, perhaps an appendix. That can help as well. So there are a lot of different ways. I'm just answering that very good question. Thank you so very much. My goodness. I always love questions. You guys are a great group, I have to say. You guys are an awesome group. Let's keep going, everybody. And my friends, we are going to finish off just taking a look at this example, and then it's off to life plan. Yay. All right, let's do this. Okay, here we go. Where am I? Here we go, right over here. After the web plan summary, don't hesitate. Website marketing strategy. Not only that, you also need to make sure that you include the development requirements. Okay. And I will also add social media. I would also add social media, right? Maybe 6.3 social media strategy and implementation, right? How are you going to go about this? This is kind of important, right? It's very, very important. So a whole other section on that. Next, my friends, comes, oops, come on, Provo, you can do this. I'm clicking everywhere here. Management strategy. So how's the management going to be done, right? All duties and so on. Personnel plan, who's going to be paid, how much are they going to be paid, and so on, okay? And then comes the financial plan, the big one, all right? Here's a quick summary here of startup funding, right over here. Important assumptions, right? We don't sell anything on credit. We accept cash, checks, debit cards, and so on. Slow growth without a major recession, and so on. A break-even analysis needs to be done, right? What's a break-even analysis? A break-even analysis determines the number of products or the amount of money that you need to bring in order to equal the fixed and variable costs so that you are able to break even, right? Some companies are able to break even in a year. Some companies are able to make a profit, like this one in question, within a month, a modest profit. Others take 5, 10 years. It all depends on all of the variables, all of the variables. All right. I'm talking about variables at the macro level, micro level. There might be a local downturn in the economy. There might be a major recession. It all depends on what you offer and so on. Also, projected profit and loss. All right. So here, month 5 and 6, they have a very big spike here. This might be the summertime for them, right over here. Okay. Yearly profit expectations, right here. What are we talking about? Gross margin monthly. Yes. How much they bring in. Margins, very good. And so on and so forth. Again, and the last one is projected cash flow. Profit and loss, balance sheet, cash flow are your 3 main accounting documents. Do not forget, we discussed all 3 already, all right? And so on and so forth. Pro forma cash flow, projected balance sheet. I'm just going over this. Then comes business ratios. What's a business ratio? A business ratio takes information from your 3 main accounting documents and is able to give you some more business intelligence, right? Business information. Let's take a look at a couple of examples that actually illustrates it a lot better than I could. Let's take a look here. See, so here we have, oops, gross margins. Here we have current assets, long-term assets. Here we have, I'm sorry, here are the main ratios. So the current ratio would be this, quick ratio, debt to asset ratio, and so on. As you can see, their debt to asset ratio is projected to decline really quickly. So that's good. They don't have that much debt. They start off with some, but then they go down like that. Pre-tax on net worth, pre-tax on assets. All you're doing is essentially dividing some of these information. So here we go. Net profit margins. Look at the net profit margins, less than 5% in year 1, 18% in year 2. Oop, don't bother copying and pasting. I'm not copying and pasting. I'm just highlighting right over here. 20%, almost 20% year 3. Here's a return on equity. It goes up and then it goes back down. That's fine. Here are other activity ratios right over here, and so on. All of this information that you see here, all of this information provides business intelligence. Look up all of these. I'm not going to go through all of them, but the ratio that you're able to get here really gives you an interesting approach. You don't need to worry about all of this. LivePlan will provide this for you. Do not worry. It's all there for you. All right, let's move on. Whoops. As soon as you're done here, you have the appendix right over here. Appendices can be various things, including sales forecast, direct cost of sales, personnel plan, profit and loss, expenses, cash flow. You can put the actual documents in here. LivePlan generates appendices for you. LivePlan generates appendices for you. It's all going to be here. You can put management biographies, your resumes as another appendix. You can put all sorts of different things. I mean, my goodness, I've seen business plans I've seen appendices that were as big as the business plan, you know, and then you'll reference the documents, you know, see appendix 1A, see appendix 6B, and so on and so forth. So it's all right there. They go together. Don't forget them. If you present it at a bank, they'll want to see the whole thing, right? But they go together. So yeah, there you go. All right. Let's move on to our last section today, which is our big one. And it's LivePlan. Is everybody still with me? everybody? Thumbs up, thumbs up. Yes. Thank you. Thank you. I always like to check in. Everybody, yes, I see all these little yellow thumbs. Makes me very happy. Thank you. As an educator myself, the last thing I would ever want to do is lose students. So it's a big one. All right. Let's do this. Let's do this, everybody. So last thing we're going to take a look at is live plan. Okay. And let's get to it. Let's get to it. I'm going to close all these other tabs here. If you give me 1 second. Thank you. And I'm starting a new company on LifePlan. I'm going to call it the Hermiston. I'm going to call it the Hermiston Ceramics and Art Gallery. All right. My fiscal year will be June. Again, length will be 3 years, length of the forecast. Again, you can change this. 3 or 5 years are the general ones. I've seen business plans that are longer. Not the best to put them longer. I would say either 3 to 5 years. Oops. And I'm going to create my company right here. And it's all good. I'm going to skip the tour. And I'm going to start immediately. Oops. Well, there we go. Okay, good. There we go. So I'm going to start and by letting you know that you have tutorials everywhere on LifePlan. They're called it's called this watch video tutorial. Over here, for the rest of our time together, everybody, we're going to talk about everything on this left-hand side. First category I'd like to take a look at is called the pitch. What's the pitch? Well, the pitch is exactly what it sounds like. It asks you some information right over here in the forecast, in the plan, and you can go ahead and create a publishable PowerPoint presentation or a link that allows you to create a tiny website to pitch your idea. This is something that is kind of neat, and LifePlan allows you to populate all of that information, and you can create that. You can take your laptop, present it to friends and family. The friends and family pitch is not a bad idea, right? Fill in all of that information, show your friends and family, get their feedback. It's a business pitch. It's a tiny version of your business plan, all right? So stop publishing my pitch. I'm going to stop publishing it. There was really nothing there. All right, click here to start the section. All right, describe the essence of your company in 1 sentence. Okay, I'm not going to do the whole thing, but there you go. All right, continue. All right, problem worth solving, again, in 1 or 2 sentences. Again, we're still doing the pitch. What is the solution, right? What's the problem? Well, I don't have a ceramic studio in Hermiston. Maybe we do. I don't know. Right? And I'm going to provide that. No, we don't. Joshua's telling me no. All right. I believe that people need a ceramic studio in Hermiston. That's the solution. I can make it as a short list right over here. Easy peasy. Next, I'm going to talk about the target market. I'm right here. Again, I can talk about who the market is. I can add a market segment. Again, we're crafting here not our business plan, but our pitch, the pitch, right? Very simple. Okay. Next, let's keep going. Next, here we're looking at the competitive landscape. Are there competitors? I can add a competitor and I can see how your solution is better. So maybe there's a Walmart that sells ceramic bowls, but ours is made here, you know, Walmart, you know, ours are locally made and of better quality, right? something like that. Oop, and are better. Right, something like that. So the moment I do this, you'll see that it'll populate it right over here. I can click on continue. I'm not going to do this whole thing, but again, just to show you what our funding needs are, what we're looking for, and so on and so forth. Sales channels, marketing activities, forecast. Again, I can input descriptors or lists. I can forecast with charts or data. It's totally up to you. In this case, you're going to actually connect it with the information you're going to put into the forecast right over here. So I need you to see this very, very carefully. This is going to be connected right over here. Okay, so a lot of this is going to be interconnected, which is great because all you need to do is put in the information once, and the whole system will provide a lot of the accounting documents for you, and it generates it all for you. I want to get to the end here so I can actually show you what it looks like. Here are the milestones. What are milestones? Well, milestones are essentially what they say. What are the steps that you need to meet in order to get to the opening of your business, right? Do I have meetings? Do I need to order inventory? Do I have to review the numbers with my business advisor? And so on and so forth. And who is responsible for that? Let's keep going. All right. Key roles. All right. Again, a quick, tiny biography right over here. And this is fun. Any partners that you might have and associated with, and then I'm done. There you go. There's not much to see here because I didn't type anything, but it will be here. Again, you can edit it anytime up here in the very top. You can present it, literally export it to PowerPoint right here. It's nice. It's pretty slick. I think it's cool. I think it's pretty neat. All right, my friends, we are down over here on our second section where we are actually starting the plan itself right here. Again, you can watch this video. I would recommend it. We're not going to watch it together, but that's okay. I'm going to start right here. Our plan, we're going to get started. First things first, my friends. First things first, you're going to need to determine your outline. What do you want to include? Right now, all we have is the executive summary, opportunity, execution, company, and financial plan. I can go ahead and click here on this section and add different parts, including barriers to entry, if I want to talk about that, company history. You might want to avoid the exit strategy. Not yet. This is for business plans that are for businesses that might be a little bit more developed, unless your business is already more developed, but there you go. Expected returns, future markets, IP. If this doesn't apply to you, you don't need to include it. Key customers. Again, these are different sections. All you need to do is drag them in at the different sections that you see right there. It's fairly straightforward right over here. Here's a SWOT analysis. I would put at the very beginning, not in the executive summary itself, but particularly in the opportunities and so on. You can add charts, tables, and so on. Look at it, take a look, drag it in, milestone tables, any custom topics that you want to add. It'll all be up to you. And here, remember, you're making an outline. You're making an outline. As soon as we're done here, everybody, and we have the outline that we're looking at right here, okay, I'm going to go on to the next section, which is the forecast itself. This forecast right over here, again, I'm going to click on Get Started. Please feel free to watch the video. It'll explain a lot of the things that I'm already explaining right now. This is where you fill in the financial tables. This is where you fill in the numbers. And I'm going to walk you through all of these slowly and taking a look at it. So again, I'm going to plug in some numbers here. All right. I'm going to add a revenue stream. What do I call it? Let's call it ceramic bowls. All right. I'm going to click on next. These are based on unit sales. I can do billable hours, recurring charges, or simply revenue only, right? But I'm going to go unit sales. Remember, this is for products that are sold in individual or set quantities. I'm going to go over to the next one, and I can determine, I can guess or project a constant number sold every month. I'm not going to do that. I'm going to go over to varying amounts every month. What is that going to do? Well, that's going to allow me to determine how many bowls I sell. According to my market research, I've determined that the summer, and I'm clicking here, is the highest. Oops, let me lower it down here. Let's say 70. The summer is when I can expect to sell the most. So I'm going to go ahead and expect here, and then I'm going to go down in September, October, November, December, January, February, really low, and then May, I'm going to put it back up again like that. That allows me to take a look at that. I'm going to look at the numbers here. I can do the same again for the next fiscal year. I can project again higher sales. Oop, not 470. Let's say about 81. Oops. Again, my market research determined that the summer was when people bought these bowls. Again, you're going to do this for every single. I'm going to do a little higher right here. As soon as I'm done, I'm going to click on next. What price am I going to sell these? Let's say the bowls, I'm going to sell them at a constant price. I'm going to sell these at $25. I'm going to save and close. And this immediately, as you can tell, is populating. Are you seeing this? Oops, there we go. This immediately is populating my what? My revenue here. Here I have the amount that I'm expecting to earn and the amount that I'm expecting. That was just one single revenue stream just for the bowls. I could do it again. I could do it again. Ceramic vases, for example. I'm going to do it one more time. Unit sales, varying per year. I'm going to do vases a lot more around Easter and, oops, I'm going to do vases a lot more around, not -10, sorry. Vases a lot more around Easter and Valentine's Day. Something like that. I'm just going to click on next. I'm going to sell these ceramic vases, I don't know, $15, something along those lines. I've determined what the best price is, and so on and so forth. Nice. I only did 1 year here. Okay. Here I have an expectation that the sales are going to rise a certain percent, and there you go. Next, are you ready? Here we go. Next, I'm going to move on to direct costs. Again, work on this, fill it out. How many different revenue streams do you have? How many different products are you selling? And so on. These are all the forecasts. By the way, change them according to what you see as the year goes on, as the years go on, and so on. I'm going to add some direct costs. What type of direct cost do I want to call it? Let's say I want to call it, I don't know, rent, for example. General cost, constant amount, $2,000, let's say $1,000 a month. I don't know. I'm going to start it in June. Let's say save. This is the cost. It's pretty flat. I'm going to add more direct costs accordingly, but I'm just going to put just one example here. I don't want to bore everybody. You get the idea. All right. Oops, 1 second. There we go. All right, my friends, let's move on. Next comes personnel. Am I the only one working? Is there going to be somebody else working? I'm going to add the name of the individual. I'm going to call it the first person myself. I want to be able to pay myself. All right. Direct labor or regular labor? What is direct labor? All right. Direct labor is for personnel whose expenses are directly related to the revenue. Okay. So around Valentine's Day, let's say, I need 3 extra people to fire all of the kilns that I've got to make the ceramics and so on and so forth. Okay, so let's call them, that would be direct labor. Anybody else would be regular labor. All right, let's say that I earn $3,000 a month. I don't know. All right, an annual pay raise of 3%. This one would be me, so it's on staff. And there you go. Here is the personnel. So again, I've got myself. Here are all other employee-related expenses right over here. Okay. You name it. I mean, it's everything else. FICO, all those Social Security stuff that you need to pay, and so on and so forth. They're all right here. I can add another employee. Let's just put myself. I'm going to go over to expenses, everybody. What else do I have here? What else are you going to spend money on? Loan payments, raw material, capital expenses. It's totally up to you. This one I'm going to put, we had this one I'm going to put rent. Okay, or how about marketing? Let's do marketing on this one. Marketing right over here. Constant amount varies over time. Let's say it varies over time. I'm going to spend just a little bit over here, and then I'm going to raise it around the winter time. I'm sorry, the springtime, and then back down. Something like that. Save and close, and so on and so forth. Let's take a look at any assets that I might have. Do I have any assets? Yeah, I have assets. I bought a kiln, for example. That kiln over here is going to have was a one-time cost of $4,000. Let's say it's a pretty high quality kiln. What type of asset? It is a long-term asset. I'm going to use it for 5 years, let's say. I do not plan to resell it. All right, and what are we noticing here immediately? Did everybody notice this? Right here, the depreciation, the value of the kiln is depreciating as the time goes by. It's depreciating over 5 years. It's the importance of that depreciation fund. Eventually, you're going to need to buy another one, and that comes from profit. So really identifying that, having that depreciation fund, that is pretty important. All right. Next, my friends, comes taxes. Again, I'm just walking you through the most important part here. The most important parts is all about financials. I'm going to set the tax rate, say 6.6%. How often do I pay it? Let's say quarterly. All right. Which revenue streams have taxes? All of them. What is your estimated tax rate? How often do you want to pay it? And there you go. All right. And so on and so forth. So you have all of that information. Let's move on to dividends. If you have any shareholders, again, this might not be for everyone. This might not be for everybody. You could skip this step. Watch the video. That can help. If you have any shareholders, that could be some part that you can take a look at as well. Right over here. How are you going to pay your dividends? Adding dividends at which time so that you have enough money so that you can do that. Any cash flow assumptions? These are our current cash flow assumptions right here. It's going down. All right. What are the sales on credit that you're going to allow? If so, how many days do you have here? So accounts receivable, payable. You may not need this. Purchases on credit, right? And so on and so forth. Again, it's totally up to you. Is it a net 30? Is it a net 15? How do you go about doing this? Next comes financing. How are you going to get money? How are you going to get money? Well, we're going to go ahead and start with add a loan. We're going to say bank loan, right? Or something like that. We're going to receive it in June. How much will you receive? Let's say it's $20,000. 2, 3. And do I have, let's say, over 60 months, 18% over 60 months? That's a lot of money. But let's save and close. Nice, very good. Do I have any other investments? Yes, maybe so. Maybe I have an angel investor. All right, and I'm going to receive some money, let's say around November, and I'm going to receive $10,000 right over here from this investor right over here. This gives me some more money. Very good. All right, very nice. All right, everybody. Now we are done with inputting all of our numbers. This is the main section. Over here, we have our 3 big accounting documents that are now going to be automatically, this is important, automatically generated with Life Plan. Automatic, no questions about it, right over here. Let's take a look. Here's our P&L, all right? Our income statement, profit and loss. It is right over here. It is done here. I can add more. Did I forget a revenue stream? Did I forget a direct cost? It's all here, all right over here. Next, my balance sheet. Again, did I forget an asset? Did I forget a line of credit? It's all over here. Nice. And then cash flow. This is the amount of cash coming in. This is the amount of cash coming out, right? And so on and so forth. Okay. Next, I'm going to go ahead and click on the left-hand side where it says benchmark. Does everybody see that? Benchmark? Over here, it is kind of interesting. You're comparing business to your competitors at the macro level. Now, according to the numbers that I have gone ahead and put in, all right, again, these were random numbers. What is my gross margin? Well, are you ready? The benchmark, the average of a business like mine would be about 57%. My forecast is 45. My operating margins are way off compared. Net profit margin, 7% for an art gallery, ceramic studio type of thing, right? And it is right here. All right, I need to make sure I did forget something. I'm sorry. I need to type in my industry. Whoops, art gallery. Forgot that. Art gallery, let's say art dealer, not there, but you get the idea. This is what it would look like normally. This is what I have here, and so on. Revenue per employee on average is this. Me would be this. Revenue spent on rent. I didn't put any of that information yet. That's fine. It'll be here. It'll be here. And so on and so forth. Again, I'm not filling it all out for a real thing. I'm just plugging in numbers to show you how the program actually works, which is really cool. Next, let's move on. As soon as I'm done here, I can actually connect with QuickBooks or Xero right over here to see my actual results, because this is the benchmark. This is what the industry average is. This is my forecast, what my numbers that I put into the forecast predict. This is me versus my benchmark, and this can be my actual results. If I connect it to my QuickBooks and I keep QuickBooks updated every day, right? What does that mean? I'm actually able to compare my forecast against what against what I actually do, and what I actually do against the industry standards. So if I have 53%, 45%, and 51%, I'm pretty close to the industry average, right? And the industry average is just another way to say the average of all of your competitors, right? At the broad level. So this perspective, this benchmark, is a really cool, very useful tool, right? It really allows you to compare, again, the industry average, number one. Number two, it allows you to compare your forecast. And number three, if you connect it with an accounting software like QuickBooks, it allows you to compare with how you're actually doing on a day-to-day basis. All right? Isn't that cool? Is that interesting? So it's all three. I would recommend that benchmark. It's something to take a look at. And make sure to type in your industry, like I had forgotten to do, but there you go. Industry was right there. Next, I'm going to keep going. Schedule. These are your milestones. What milestones are you looking at? Meet with potential investors. Meet with potential investors. Who is responsible? Myself. Info goes here, and click on OK. Here it is, and it's today. All right, and it would be today on the 23rd, right over here. So add a milestone. This is your schedule. It really allows you to go ahead and take a look. It's really neat. really neat. Next, dashboard. What's a dashboard? Well, an up-to-date business plan is just the beginning. As you start executing and implementing your plan, your information is going to appear here on the dashboard. Connect it with QuickBooks or connect it with Xero, or you can do manual entry, which takes a lot longer. But if I do that right there, I can actually see a really cool dashboard that shows me my revenue and expenses, that shows me my revenue breakdown, expense breakdown, and so on. It's all here, all right? It's a live view, which allows you to see everything coming in, coming out, everything that you were looking at with regards to your, you name it, projections and so on. It's really, really a neat thing. And that's it. You can actually compare it with your forecast. You can compare it with everything else last month and so on and so forth. And there you go. So suppose you're done. Suppose we're done. Like everything. You finished everything. How does LivePlan print out my actual business plan? Well, that's our last section that I'm going to show you. Everybody ready? Here we go. Back over here on plan. Plan. Everybody see that on the left-hand side, top left? Back over here on plan. I have my outline, and here there's a button that says download and print. This download and print button will allow you to essentially do that. Download and print your plan. You can print it as a PDF. You can export your plan to Word, right? And so on and so forth. But that's not all. You can change your document type. You can have a different series of types that you would like. You know, suppose that your business colors resemble this one right over here. If this is the one that you would like, save and close, and then download as a PDF. It's going to take a little bit because remember, you've inputted a lot of information, a lot of numbers here. And when it's time, just click on Open PDF, and then you can save a copy right there. I didn't put in any information, any written information, but it's all there. And it also includes appendices, like I promised. It also includes appendices. It's all there. It makes it really, really nice. All right. And yeah, so it's all there. Remember, is it accurate? Yes, as long as the numbers that you put in are accurate. If the numbers that go in are good, what comes out is going to be good. Okay, very important. And so on and so forth. Again, there's more that you can put into your appendix. But again, how do you do it? You go over to the outline right there. If you want to put in more things, here we have examples of statements. It will all depend on that. Again, you can add in your biographies or something like that. In the appendices, your resumes, if you want. I've seen that done too. So there you go. Now, suppose you're not the only people. Suppose you are not the only person working on this business plan. Well, you can invite others to collaborate. Add others, other users, add email addresses, and so on. Right there, unlimited contributors. And then you can get a free guest pass for somebody who wants to take a look at it or whatever. It's totally up to you. Totally up to you. All right, that is it for LivePlan. And I'm going to return to the slide presentation that I had. You just give me 1 second. 3, 2, and 1. Going to return to the slide presentation. I want to make sure that I show you all the sources that I've used right over here. This is just my sources and references right there. I want to be a good student and show my work. It's all there. All right. And as always, my friends, please remember to contact anybody on this list, any of our SBDC advisors right there. If you have any questions, they will know a lot of it, and they will have a lot of answers for you about crafting the business plan They're wonderful. They follow through, they follow up with you. It is a wonderful team to work with. Once again, I am Arnaud Prévost, and along with David Anderson, we are program coordinators. But the phone number down on the bottom, or the email information down on the bottom, that is the one. That is the one. Thank you. Thank you. And you know what, my friends? That's all I've got. That's all I've got. Thank you very much for being such a wonderful, wonderful group. You all have been wonderful, especially those of you who asked questions. I always love those who ask questions. Thank you very much. Thumbs up to all of you. Thumbs up to all of you. And the next step is really to contact that advisor, the SBDC advisors. I'm going to put on that slide one more time, my friends. Oops. Right there, 541-278-5833. 541-278-5833, or sbdc@bluecc.edu. Those are the ones that you should contact. And if you don't have any more questions, and again, the questions can be in the chat or you can ask away. If you don't have any more questions, my friends, that is it. We are done a little bit.
If you would like to speak with a business advisor at no cost to you, please feel free to reach out. We're the Small Business Development Center at Blue Mountain Community College. Please attend one of our workshops, either virtually or in person, or just give us a call. Thank you.